Good day, my dearest little captains. My name is Adam Livingston, and I am your #1 source for Bitcoin and Bitcoin Treasury company analysis. Now, as I have been covering so many of these companies during this monetary revolution event, I keep getting asked, Adam, how do I know the best value play? Well, lucky for you, I have developed a framework by which you can make this decision. Now, that said, there are still variables that you must decide for yourself. I don't know your financial goals, your risk tolerance, or whether or not you owe lots of alimony after your wife ran away with her personal trainer who got into Bitcoin in 2014. Remember, this is not financial advice, this is financial entertainment. You need to stop being so stupid to listen to a 29-year-old millionaire Bitcoin wizard on YouTube, and instead consult a boomer who thinks silver mining stocks will send your kid to get a degree in underwater basket weaving at the local community college. Consult a professional, kids. That's what the law says. I can't recommend anything. So it sounds like you need to do your own research and come to your own conclusions. Stick around to the end to see my selections for my personal Bitcoin treasury company, Goldilocks Zone. Now, before we dive into capital markets warfare, let's ground the metaphor. In astrobiology, the Goldilocks Zone refers to the narrow band around a star where conditions are just right for life. Not too hot, not too cold. Too close to the sun and you burn, too far and you freeze, but within the zone, the perfect conditions for complexity, growth, and survival. The metaphor applies exactly to Bitcoin treasury strategy, and luckily, your dearest Bitcoin chicken gizzard lizard wizard has coined the Bitcoin treasury company Goldilocks Zone. Too small and no one cares. Your Bitcoin buys barely register. Too large and you lose torque. Your capital moves glacially. Too early and you get buried in regulatory risk. Too late and the asymmetric upside is gone. Wrong jurisdiction, your cost of capital strangles the mission. But if you hit the sweet spot, if your company lands in the Goldilocks Zone, you unlock something extraordinary. An ability to accumulate Bitcoin at scale with precision with reflexive amplification, turning corporate structure into a sovereign capital engine. This framework isn't about vibes, it's a surgical map, a monetary life zone where shareholder time value is preserved, multiplied, and weaponized. Now, let's get into it. Size matters, but only if you're small enough to explode. Let me explain something to the lobotomized financial advisors still pushing index funds while Rome burns. If your float is obese, your BTC-per-share moves like a dying elephant on opioids. Congratulations, you bought Bitcoin and no one noticed. Your share price is now as reactive as a coma patient. But when you're small, and I mean razor-thin float, low market cap, unreasonably tight, every single sat hits like a nuclear warhead. You buy a few hundred Bitcoin and your per-share exposure spikes like it's on bath salts. Reflexivity isn't just real, it's violent. The chart stops looking like finance and starts looking like a felony. This is the torque zone. This is where capital becomes a weapon. This is where every raise, every announcement, every new BTC acquired is a hostile act against the fiat regime. If you're not in this zone, you're just LARPing as a Bitcoin company while your market cap waddles sideways. And let's be honest, if you're too big to move the needle, you are the needle. And someone else is about to thread you through the eye of Bitcoin's escape hatch while you stand there waiting for a buyback. Small enough to hit hard, small enough to react, small enough that one good treasury raise turns you from obscure to legendary. Now here's where 99% of Bitcoin companies disqualify themselves. You're stacking sats like it's a hobby, no access to capital markets, no equity lines, no institutional credibility. Your investor deck is a Google Doc with typos, and your last fundraise was a Discord AMA with 3 dudes and a raccoon in a hoodie. Listen carefully, if you can't raise capital, you are not a Bitcoin treasury company, you are a cosplayer with a hardware wallet. The Goldilocks Zone demands access to real money, to real markets, to desks that move size and care about structure. You need the pipes, you need the compliance, you need the lawyers who wear suits because they have to, not because their mom laid it out for them before their Series A call. Because here's the truth, you might have torque, but if you can't amplify that torque with fresh capital, you're just shouting into the void while Metaplanet eats your lunch with a 0% bond from the Tokyo underworld. You want to play this game? Then play it institutional. Raise fiat, buy Bitcoin, dilute strategically, and loop it. Weaponize the reflexivity. If you can't tap the system, you can't drain it. So yeah, be small enough to spike, but be big enough to matter. Or stay broke, tweeting laser eyes from your mom's house while the real players colonize the monetary future. Now here we go, folks. Daddy Wizard is going to say the unspeakable. Dilution is not evil. Dilution is sacred if you're early enough. Only broke TradFi relics and CNBC parrots fear dilution. Oh no, you're printing shares, yeah idiot, to buy the one asset that's destroying the fiat monetary order in real time. This isn't some tech company issuing shares to hire more DEI consultants. This is monetary jujitsu. You raise fiat, you buy Bitcoin, you dilute upward. You elevate the entire float. Every sat you acquire raises the gravitational floor under your stock. Done early, every capital raise is a strategic artillery strike against fiat valuation frameworks. And the market loves it. Why? Because reflexivity, because torque, because stacking BTC while the window is open is the only sane move in a system that's collapsing under its own debt load and lies. You think Saylor diluted because he was reckless? No. He diluted because he understands temporal arbitrage. He understands that printing equity now to escape fiat forever is the greatest trade in corporate history. You're not diluting to survive, you're diluting to transcend. But here's the catch, you have to be early. If you wait until BTC is a $3 trillion asset and every hedge fund intern is building BTC-per-share models in Excel, your dilution will be punitive, reactive, and weak. But if you do it now before the crowd wakes up, you create a capital structure that becomes unassailable. Early dilution is not dilution, it's escape velocity. Here's the paradox. You want to be early to Bitcoin, but not first to the gallows. The pioneers caught arrows. They wandered into the wilderness while the SEC was still drawing cave paintings about investment contracts. They had no accounting clarity, no boardroom cover, they were martyrs. Useful, but dead. Now the rules are written, the lanes are paved, and the blood is dry. FASB flipped, Gap is on board, Bitcoin on the balance sheet is no longer rebellion, it's board member competence. ETFs have detonated the Overton window. Larry Fink is literally reading Saylor quotes on Bloomberg. What was once financial terrorism is now best practice. This is the Goldilocks moment. Late enough to not be jailed, early enough to still front-run the institutions who need 6 compliance teams and a nervous CFO to touch cold storage. If you're still waiting for more clarity, you're not cautious, you're useless. You are the bureaucratic molasses slowing down the species. Regulatory clarity is not your obstacle, it's your weapon. You can now structure equity raises, treasury buys, OTC deals, and custody disclosures with complete institutional hygiene. You don't have to fight the system anymore, you can use it to bury the system once and for all. Capital isn't neutral, geography is strategy, and if you're not exploiting your jurisdiction's monetary dysfunction, you're leaving blood on the floor. Let's break it down for all the blue check NPCs still measuring companies by price to earnings. The US has the deepest capital markets in history, but it's also drowning in red tape and spiritual decay. Japan, they're handing out yen like candy on Halloween and asking politely if you'll take more. Canada, still pretending to be capitalist, but you can structure deals there before a lot of other jurisdictions. And you've seen the total lack of friction with Smarter Web Company in the UK. This is arbitrage. You raise fiat where it's cheap, you buy Bitcoin where it's free. You list where the volume flows, and you domicile where the claws haven't reached yet. Metaplanet isn't in Tokyo by accident. UTXO didn't get involved with Smarter Web in the UK because they like tea and crumpets. These companies are positioning themselves on the map like snipers, finding the soft underbelly of sovereign debt markets and stabbing fiat through the yield curve. If you're raising capital like it's 2004, domestic only, lawyered to death, begging banks for mercy, you are not in the game. You're just reenacting TradFi rituals while your cost of capital bleeds you dry. The Goldilocks Zone understands that where you raise is just as important as what you raise. Global liquidity is fragmented, but Bitcoin is universal. That's the arbitrage. Exploit it or be be exploited. This is the part where reality breaks. You buy Bitcoin, your stock goes up, you raise more capital. You raise more capital, you buy more Bitcoin, your BTC per share spikes. BTC per share spikes, more people FOMO in, they buy, your stock goes up again. That's the loop. It's a feedback vortex that turns capital structure into a recursive economic weapon. Reflexivity isn't some abstract Soros theory. It's a biological event in capital markets. Price creates demand, demand creates price, and in Bitcoin treasuries, that loop compounds through scarcity, narrative, and envy. Because once people realize your equity is leveraged digital scarcity, you stop being a company, you become a proxy for monetary rebellion. A Bitcoin per share machine, a black hole for fiat capital pretending to be a stock ticker. And here's the best part, it's just beginning. The reflexive premium loop is still in its larval stage. Most analysts can't model it, most funds can't believe it. Most boards are too cowardly to trigger it. That's your window, that's your arbitrage. Start the loop before they believe in it, and by the time they understand, you've already eaten the multiple. You don't chase premium, you become the premium. You've seen the blueprint. This isn't a theory, it's a design for monetary conquest. A precise convergence of scale, timing, jurisdiction, and capital reflexivity, engineered not to play the fiat game, but begin to end it in fast forward. The Goldilocks Zone is where asymmetric Bitcoin exposure becomes structurally embedded. The Goldilocks Zone is where asymmetric Bitcoin exposure becomes structurally embedded, where every raise is a sovereign acceleration, every sat is a weapon, and every shareholder becomes a wartime beneficiary of fiat collapse. This isn't just a treasury strategy, folks, it's a declaration of war. A declaration that the era of passive fiat decay is over, that corporate balance sheets are no longer meat shields for inflation, that we will not sit idle while our time is diluted, our labor is debased, and our capital siphoned to fund clown shows and endless war. Now we opt out. We build new machines. Reflexive, weaponized, sovereign machines stacking Bitcoin, compounding torque, and absorbing capital like temporal gravity wells. And here's the prophecy, folks. Within the next decade, the most valuable companies on Earth will not be selling soda, software, or sneakers. They will be the ones that monetize the death of fiat, that stored energy when others chase yield, that architected Bitcoin per share while the world laughed, then begged to buy in. The Goldilocks Zone is narrow, but if you enter it now, you just don't survive the final collapse. You become its beneficiary. Let the sovereign era begin. My name is Adam Livingston, and I am the Bitcoin Wizard. The three companies that are now firmly in my personal Bitcoin treasury company Goldilocks Zone are Metaplanet, Smarter Web Company, and Sequans. This will likely change fast because the world is taking notice to this revolution at a very fast rate. We will undoubtedly have more finding their way in, and maybe some finding their way out. Please subscribe to my channel so you can keep up to date on the greatest wealth transfer in human history. I am your #1 source to lead you through this crazy storm. Have a terrific day, my dearest little captains. Class dismissed.